So it's
Oh, good. Yeah.
100% win rate.
Yeah,
Hello,
that's pretty
guys. Good
impressive.
morning. I can't hear.
Hey, Joan. Yeah, you can
Hey,
hear?
I can barely hear you guys. I'm trying to do it on my computer, um, but
You don't have good
I'm in the.
volume? I'm hearing you good. I'm hearing Holly and everybody. Everybody is coming through loud and clear.
But Donnie, I want to run that by you. Well, let me test it for a week or two, and let you know.
Okay. Yeah, appreciate that. Yeah, those I've been getting into like levels and a lot
Hmm.
more, because of mainly because of Bob. Bob's really good
Hmm.
with those levels and so I've been really
She's up
getting into
there
that.
with Bob. She's up there with Bob, but she trade for prop funds. She trade for the one that pay out daily,
Uh-huh.
and she makes about 3 or 4 thousand per account per day. She have 20 accounts.
She's doing pretty good then. And if she's up there
It's-
with Bob, that's really saying something.
Yeah.
All right, so okay, let me get this going here. I wanted to do kind of like a stripped down, top down version of what we do to so that it just maybe it'll click and we'll have this like video to give to people that pop into the room and are trying to get up to speed. So I've had people ask about something like this, and so this is going to be an attempt to try to have some content for people to kind of jump in there and get to know the strategy and how it works and stuff. Um, so this is basically almost a clean chart. I mean, I can hide. Let me see. I can hide my bar coloring. Let me see if I can hide. No. Bear with me a second. Yeah, I've got to do that and unhide my. Okay, now I've got to hide this. I want to get rid of this bar coloring real quick. Bear with me a second. I don't think it'll be a hindrance to you if I do it one way or the other, but for the sake of just stripping it down all the way.
Am I supposed to be seeing something on the screen? Because I'm not seeing anything.
Yes, you are, and it would help if I shared my screen. I've got it. I've got it on the YouTube, so you'll be able to go back and watch this video again. But yeah, I just shared my screen on the Discord chat, voice chat
Oh,
as well. So
do I have to click something else to get it? Because I
yeah,
don't.
click on the voice chat channel there where it says voice chat, and it'll
Yes.
pop up some screens there, and you should be able to click on my screen to view my screen.
Okay. Yes. Thank
Got
you.
it? Okay. Um, and then if you guys have questions, if you don't want to unmute and ask, then you can type it into the trade floor.
So I'm new to this, Donnie.
Yeah, yeah. I mean, are you a new trader or are you just new to the room?
I'm new to the room, but I joined like OTA like 2019. I don't know if you're familiar with them, Online
Mm-mm.
Training Academy. And yeah, cost a lot, like 50 grand. But I didn't do anything because I was too involved with my real estate business.
Mm-hmm.
And I'm now starting, and I by accident I don't know how I did trade with future, and I kind of like future, so I kind of stuck with future.
Mm-hmm.
Um, yeah, but last week I kind of screwed up. I'm like a $25, $100 in a hole. So I don't. Yeah, but I'm 66 years old, and I'm technology is like really like it's difficult, right? So
Yes. Yeah. 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 So yeah, that's a similar story to me. I mean, I've been trading since 2008, I believe.
Oh wow.
Uh, and I'm 38 years old. So let me see. That was I'm trying to think of when my sophomore year of college was. It's been so long ago. That's the benchmark for me. That's when I started trading or learning to trade, and
Oh
I believe
wow.
that was 2008. So that's been
Oh wow.
16 years ago. Um,
Oh wow. Oh my God.
and I started out just learning. Of course, I didn't have a lot of money, so I bought $100 stock trading course. The guy's name was Bill Barrett. I don't know if he even still has his website or anymore, but anyway, I tried to learn from him, and it just didn't work out. And so that led me down to buying a whole bunch of courses, just like everybody else. I bought a bunch of
Yeah.
courses and indicators, and I still buy indicators, but I just do it for now I just do it to try to stay up to date and know if somebody I feel like somebody's doing some good coding uh, here or there on TradingView or whatever, I'll buy their indicator and see what they're doing, see how their stuff is working. Um, that's certainly not to help me with my trading more as much as it is just to make sure my indicators are as good as theirs. I'm not even charging for mine, and they certainly are or better. Um, but anyway, I've got also, I've got subscriptions to Zierman. Those guys are really good programmers and coders, and so I've got some of their tools, and I just pay $100 a month for them. So anyway, all that to say, I've been through a lot of what most people that are trying to learn trading. I've been through that. I've been down that
Yeah.
road, and now I'm to the point to where I'd like to try to help people as much as I can to learn this stuff. And there's certainly a million ways to go about trading, um, and this is just my rendition of how I do it. And so whether you use what I do as inspiration to make yourself better or to improve your own strategy, whatever, or if you just fully adopt my strategy, that's up to you. I don't, I'm not gonna be offended either way. I'm just here to try to get you a little further down the road and get you where you can make a living doing this. And so anyway, that's kind of the basis for why I'm doing this, and so hopefully this is helpful. And I thought, if I just strip my charts down and we can layer in the tools that I use one at a time and kind of go over them, then let me see, GAN pivots. Let me get rid of that too. Um, we can kind of layer in all these tools and hopefully with me recording this, you'll be able to go back and watch anything that didn't make sense to you, and then you can ask questions from there or whatever. But anyway, we got to start somewhere with this stuff, and so we'll
Right.
start with a stripped down version of the chart, which is just this is just a Heikin-Ashi, a 3-minute Heikin-Ashi chart on TradingView of the ticker QQQ, which is an ETF of the Nasdaq. Um, and so basically, I mean, if you pull up a chart, I know we're trading futures, right? But if you pull up an NQ chart and you pull up a QQQ chart, they're going to almost look identical. And so, and the reason I started doing, I mean, the reason I just the reason I just chart the QQQ and trade the NQ is because at the time when I started out with TradingView, I already had all my rhythmic data feeds from the prop firms and all that, and it just seemed stupid to me to pay for uh, uh, real-time data in TradingView for the futures market. And I only trade NQ, right? So I mean, it just made sense to me to start charting QQQ because you get free real-time data with the free subscription of TradingView, and so I started out with the free version of TradingView, And now I pay for I get the Black Friday deal and get the best package every year, and I pay for a year at a time. But it's just always stuck like that, and so I just I chart QQQ. It's just the way I've always done it. You can certainly pay for the real-time data, futures data in TradingView, and chart NQ if you want to, and it's going to be the same thing, but you certainly can do that. That's just what I do. And so that's what you're looking at here is a 3-minute Heikin-Ashi chart of QQQ. And then so from there, we can start layering in some tools here. And the main one, this is going to be, the main tools. And I'll strip this down as well. I'll strip this down, and we can go over how this one particular tool works. We'll start removing stuff here. Buy signals, ATR. We'll just get rid of all this stuff. So that we basically just have the Bollinger Bands on there. So these Bollinger Bands are, they're different than the regular Bollinger Bands. You can probably, if you're familiar at all with Bollinger Bands, I want to put some Bollinger Bands on here, and you can see the difference, right? So there's the regular Bollinger Bands. You see how the upper and lower band, especially the upper on an uptrend, it's going to stay above, for the most part, it's going to stay above the bars, the highs of the bars, and on a push down, for the most part, the lower band is going to stay below the lows of the bars. That's just that's how regular Bollinger Bands work. So let's hide that and bring mine back up. See how mine, when you get a breakout of these bands, it kind of trails it almost like a pretty fast moving average. So that's the difference between my Bollinger Bands and just regular Bollinger Bands. And this a Bollinger Band is basically just a moving average with standard deviation bands. So you got a standard deviation to the upside and you got a standard deviation to the down. It's self-optimizing using artificial intelligence, which is the AI that's being used here is the KNN. K nearest neighbor is what that stands for, and it kind of compares the previous 100 bars. So go into the settings here, and you can adjust that, but the look back bars is default 100, and that's what I use. So the previous 100 bars, it's going to optimize itself as in like crossing over. It's trying to figure out, okay, when price crosses over here, what's the optimal setting for this middle Bollinger Band, this middle band, which is the moving average. What's the optimal moving average length for when price crosses over? So you see, I mean, when it crosses over here, it stays in there all the way to the top, and then it crosses back over the blue line, and it stays in there, pretty much almost, it except for right here, it hangs in there, and then it crosses over, and it's just trying to optimize itself within the previous 100 bars. So this thing's going to be the most accurate, and it'll still be accurate beyond that, right? Beyond the 100 bars, but it's trying to optimize the most recent 100 bars. So this is a 3-minute chart, so that's 300 minutes. That's what is that? Let's see, 300 minutes divided by 60 is what? 5 hours? Something like that. So that's what it's trying to do. It's just trying to optimize that. So then, that's the moving average, right? The middle band is that moving average that it's using the artificial intelligence to optimize. And then then we add in the standard deviations. And so this whole concept was introduced to me by the guy. There's a guy in my Discord. His name is Jay. Jay West is his name. He lives in Austin, Texas. His screen name is JScat. I met him back in like 2012, and I was getting into trading futures, and I stumbled across his trading room that he had, and he was using something similar to this. I wish I could go back and find some screenshots, but he was using something really similar to this, and he was the inspiration behind this whole these Bollinger Bands. So the only difference really is the artificial intelligence that I've coded into it to try to self-optimize. He was using an eight moving average Bollinger Band. That was it was a moving average of a moving average, and then he had his Bollinger Band. The Bollinger Bands were an eight moving average of an eight moving average, and that created his Bollinger Bands. So the only thing I've added to it is the artificial intelligence. So all that to say, that's the Bollinger Bands. That's the main tool that I use. So the setups that I like, if you just put this on your chart and you can strip it down like this, like I've got it, but just go back and look at the the historical, and what you'll notice is that every time price gets, almost every time, I'm gonna say 80 to 90% of the time, every time price gets inside of one of the bands, either the upper or the lower band. So this example here, we can blow it up and we'll look at a bunch of different examples. Every time price gets inside of here, you almost get a retracement back to the middle band. See that? So I've got it coded to where anytime price is inside of these, the upper or the lower bands is inside of these bands, the background will turn blue. So that's the blue backgrounds that you're seeing. It's just, all that is price being inside of the Bollinger Bands. So you can look. We can just look at the backgrounds. Every time background turns, you get this move at least back to the blue middle Bollinger Band. You see that? Every time the background turns blue, move back to the middle band. Blue background, 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 failure there. Blue background, middle band. So how many did I call out there? 10, and only 9, only 1 out of the 10 failed. I'd say that's pretty good odds, right? And so that's the guts of what I do. Is when that background turns blue, I'm looking for a move at least back to that middle band. Does that make sense?
Yeah.
Anybody have questions regarding that? That's pretty self-explanatory. But
so how do we put this on our chart? Is it your thing? It's something you made up?
Yes, it's an indicator that I've programmed, and you can access it by going to there's a channel in my Discord just below this voice chat. It's like 2 down. It says trading system, and there's a channel in there called main indicators. So if you click on that, it's probably up at the top. It says self-optimizing EMA with Bollinger Bands. And it's a private indicator. So the only way you can access it is if you have the link, and you have the link there. You just click on that link, and then it'll pull up a window, and then you'll scroll down. Let me see. Let me just pull it up over here. The trading system,
Yeah, it's kind of hard. It's kind of hard, Donnie, to see the right thing to see the right thing. Is there a reason
Yeah, I
for
don't.
that? Is
Yeah, it'll probably come through clearer in the YouTube recording. Um,
okay,
and so, but if you just go to the main indicators channel, it's the
okay,
very first. If you scroll, you'll have to scroll up. It's the first post in there by me.
okay,
And you just click on that. It's a trading view link, and you just click on that, and it'll pull this up right here. It'll pull this window up here. Um, and so then you'll scroll down, and there'll be a blue button that says Add to Favorite Indicators right here.
okay. I'm
Add to
writing it down.
So you just click that, and then so that's going to add that to your favorite indicators. But for some reason, you'll have to restart your trading view. So after you click that blue button,
Mm-hmm.
you'll have to just completely close down your trading view and then restart it. And then once you restart it, let me get this out of the way. Once you restart it, you'll be able to go to your indicators here and then go to favorites, your favorites,
Okay,
and then it should be in there. It'll be it'll be in the S's. It's alphabetical order here. So the S's, it'll be right here. Self-optimizing EMA with Bollinger
okay,
Bands.
okay,
And then you can, once you've got that added to your favorites, then you can add it to your chart. Good question.
okay.
I'm glad you asked that because, that'll be something that people will want to know, and it needed to be recorded in the video. So that's basically, that's a pretty high probability setup. Just that alone is a pretty high probability setup. Just the blue backgrounds alone. So we'll take it a step further, and we'll let me collapse this, and then let me add the stochastic RSI in there so that you can see stochastic RSI. So here's the stochastic RSI. You don't have to have this on your chart for the Bollinger Bands to work, because for the signals that I'm about to show you to show up, because this stochastic RSI is programmed into the background of the Bollinger Bands. And so let me pull up my setting, or my Bollinger Band settings here, and unhide the buy and sell signals. And also let me get rid of the pivots. Okay, so you'll notice that when I added back in the buy and sell signals, that's these green and red triangles. Those triangles come from this stochastic RSI. So there's two rules to generate these buy and sell signals. The first one is we have to have price inside of the Bollinger Bands, which is the blue background. Price has to be inside of there. That's one rule. The second rule is price has to be, for a buy signal, price has to be in the oversold position on the stochastic RSI, and it has to be coming out of the oversold territory to generate that buy signal. So, the idea is that price is squeezing inside of the Bollinger Bands, or reverting back, trying to revert back to the mean, because we already have the high probability of anytime we get a blue background, we almost always get a reversion back to the blue, at least the blue band or beyond. So that's we're taking that high probability setup of the blue background, and then we're adding in another high probability condition where, price coming out of oversold for a buy signal, and price coming out of overbought for the sell signal. So that's how those red and green triangles are generated on the chart. You'll never see a red or a green triangle in a white background. And the reason is because that would violate one of the two rules. It has to be a blue background, which means price is inside of the Bollinger Bands, and the next one would be coming out of overbought or oversold. So let me add like a horizontal line to some, a vertical line to some of these, so you can see. There's the red triangle. See, price is coming out of the stochastic. Stochastic is coming out of the overbought there. Here's a buy signal, blue background, stochastic coming out of the oversold. I don't have to do any more of these, but I'll do one more. There's a red triangle, blue background, price coming out of the overbought, and so forth.
So you have those set up with a number, like for overbought and oversold, like 40, 60, or anything like that? Or do you just...
This is just the stochastic RSI with the standard settings, the default settings that that TradingView has. And yes, that the overbought and oversold is going to be the 80 and 20 levels. 80 for overbought, 20 for oversold. Does that make sense? Anybody got questions regarding that layer of the strategy? If not, then we'll, let me see. Let me go up to the trade floor, make sure nobody has questions. No questions. So, okay. Am I that good of a teacher or what?
Well, since I'm the only one asking, I might as well go ahead.
Okay.
So when you have the arrows that says buy or sell, do you wait a little bit longer, like maybe for the next candle, or how do you do that?
I don't personally. I just take the trade and I manage it. I just manage it accordingly. So sometimes, every now and then, you'll get an attempt to push into the Bollinger Bands. I'm trying to find one that might have worked like that. This one right here might have. So that bar, this bar right before the blue background, this bar might have flickered a blue background, and then it kind of, that bar just kind of retraced back to not be within the Bollinger Bands and closed like that. And so, but the next bar, you got the blue background. So, but I probably would have been in right here when that flickered blue. That's just my personal style. That's the way I like to do it. But you can certainly wait for the bar to close. Only problem with waiting for the bar to close sometimes is that, like in this case here, if you'd have waited for this bar to close, well, you would have probably already been halfway to your target, which is the middle band. If you'd have waited for this bar to close, you would probably, by the time you got in, you're already almost halfway there. So, that's just something, I guess, a personal preference you would have to work out. I just take the trade. When it turns blue, I take it. And I manage it accordingly. Do you take it once you see the blue background, or do you wait for the arrow too? We'll get to how I filter some of these. But yeah, I'm not opposed to just taking a blue background. I don't always just wait for a triangle. Just because just look at it. Go back and look at your chart after you've added this, and look how many times it goes back to the middle band. And that's not even that even the ones that don't even have a triangle. You don't even have a buy or sell signal. They just go back there. So there's still a high probability, even just the blue backgrounds alone.
Right. I'm sorry. Right where you are right now. Go up a little bit where the red candles are. Up
right here.
Yeah. Yes, to the left. To the left.
Left.
Yes, right there. So where the green arrow is, and then this green, right? But then when it goes to the green bar, it came all the way down. What would you do then, since there's it's not in the blue background to go short, or didn't have the arrow to go short? What would you do? You would just get out there at the green, with right there, and then
I would take this. Would be my entry right here. Let me see. trend line. Okay, my entry would be here,
Okay.
and then first target would be here. And so when it hits first target, I take half off, and we can go over the money management part of it here. It's a little bit ahead of the game, but it won't hurt. So if I were to take half off here at the middle band, that's always the first target for me. So if I were to take half off, let's draw a line right here. See if you can see that line. Let me blow it up some so it makes it a little easier to see. So if you see that line there, that's kind of the distance. Let me make it a little prettier. But basically, you know, that's the profit that you would have taken on the first half of your position. So let's just say I had two, and I suggest going with using multiples of 2, like even numbers on your position sizes, so that you can take that half off. And in this case, let's say I had 2 contracts on right here. So I took a 2 contract position at the entry here. I would have taken 1 off here when it hit the middle band. That leaves me with 1 contract, but this would have been the profit that I would have taken on the first half of my position. And then let me add this. So this is an equal. It's just copied and pasted that line there. So I can take a loss now on the second half of my position down here. I can take and I can take that loss on that second half, and I still have a break-even trade. That's, you know, because I took, let's just say I made $30 on that first contract. And so then on the second half of my position, I can take a $30 loss on the second half of my position, and I still, that's a net zero. I have a net zero at that point. So if you can get to the middle band and take, or even close to the middle band, you take half off, well, you then have that cushion on the second half of your position to let this play out. So what I do is I take my half off, and then so I take that profit here, like this would be my profit, and then so I mean I can still have my stop here. There's nothing wrong with that. It just would be a break-even trade. But you know, I tend to let it get to the middle band. I take my half off, and then I move my stop to break even. So that protects that profit that I've banked on that first half of my position, and that leaves me, that puts me in a no lose situation. Even if you move your stop to above that, like let's say you took the $30, well, let's just move it up to like $15. Well, you still have a net 15. It's still a winning trade if you take a $15 loss on the second half, right? So that's the way I like to manage the trade. I like to get that half off. And you can do that anytime. You know, I shoot for the middle band, but there's certainly times when it gets up here and I feel like it's struggling or something's happening, and you can if you've executed a trade, you know what it's like sometimes. You know, the markets will kind of stumble, they'll jack around on you, they'll mess around, they'll start messing with your emotions, and you know, and the key there is to keep a pulse on your emotions. If it gets like halfway to the middle band and you start feeling funny, well, take that half off. You know, take that, and let's just say it's like right here, you took that half off. Well, that gives you that cushion on your second half of your position to just say, all right, I took my half off, I gave myself some cushion. It should relieve a whole lot of pressure off of you at that point, to manage the trade without any emotions. So if you can get to this part right here, if you can get to that stage of the game, as far as taking the trade and managing it, if you can get to this stage, then you shouldn't have any emotions involved at all, because you're in a no-lose situation at that point. The worst you can do is break even. So that's how I like to manage the trade, and you'll see me do it in the room, either in the live room. You'll see me do it live, but I when I'm calling out my trades, I'll say half off here, stop to break even, and then I'll say I took another contract off, another contract off, and I'm flat. That's basically how I call it out. All right, we got a couple questions here. Do you take it once you see the blue background? Oh, that was okay. I already answered that. How about stop loss if price don't hit middle band? Yeah. So stop loss, the way I used to do stop losses is I used to do like previous swing low. So like if I took this entry here, my stop would be here. Let's see, and get rid of that. Let's see. My stop would be here. That previous swing low. That's the way I used to do them. That's one of the ways I used to do them. The other way I used to do them is I do like a max pain stop loss. So, let's just say I took 2 contract position there. I would just tell myself I'm only going to risk $100 on this trade. So if it hit my max pain of $100, I'd just get out. And there's nothing wrong with either of those approaches. But now I studied this. This is one of the tools that I studied over like the Christmas break. And the reason I did is because, I started this Discord mainly. I started this Discord and people would ask me about my stops and, how I'm doing them or whatever. And it, max pain for me is going to be different, than somebody else's or whatever. It's really arbitrary, the way I was doing it, and it works for me, but it doesn't really help somebody else that's trying to do what I'm doing. And so that's what kind of led me to studying and trying to figure out a way to do it. And this is one of the ways. Let me see. So that brings us to layering on some more tools. So these tools that I'm bringing into the chart here are another set of Bollinger Bands. And don't freak out. I know it's getting a little bit messy, but this is one of the tools that's going to help you with your stop losses. So this is another set of Bollinger Bands, and these are called fib bands. So they're Fibonacci based, and they give you some levels to work with. So it's got a bunch of, let me zoom out. So you've got the middle pink band there. If you can see that, you've got the pink band. That's the middle of the Bollinger Band, or the fib, the main fib average there. And then you've got the upper band, which is that red line, and then you've got the lower band, which is the green line. And then in between that are your fib standard deviations. And so I started looking at that, and I was like, man, that's got some merit to it as far as risk reward and all that. So the way let's just take this same trade that we're talking about here, and we'll layer in this fib bands. To try to make sense of it, right? So my entry is still there. That's this blue line here. And then let's just get this out of the picture for now, and we'll move it back once I explain where the stop losses would be. So the entry's here. Your stop loss would be this next band below it. See that band there? That fib band? That would be your stop loss, and it almost got there. Well, I mean, it really didn't get there. I mean, we were already at this bar here. It already done this by the time we even got in, right? So you wouldn't have even taken any heat on this trade here. But your stop loss would be there. That would be your stop loss, at least your initial stop loss. And so your first target is this middle band. Stop loss is here at that band there, and then your first target is here. Second, so I would be half off there. Stop. All right, let's just walk through this. So we've got our entry here. Stop loss initial is here. Initial target is here. So once we hit the initial target, we're taking half off, and we're moving stop to break even. and then our second target would be this this upper band or the green band there, and then or that just happens to land where the middle band is basically. Um, but it doesn't matter if it ends up hitting here, it just ends up hitting there, which is what it did, right? Price hit that middle band. It just happened to be almost basically where your initial target was, but that would be your second target. And then your third target would be this band here, and you just kind of work your way up. You just kind of work it on up as if it just keeps on going. Your target would be here. Your stop would be the pink band. If it keeps on going, your target would be here. Your stop would move up to there, to the band below it, and it just keep on going. If it just keeps on going like that. And so these fib bands are one of the tools that I really studied over the Christmas and New Year's break, and I hope my hope is that it'll help everybody have just kind of a standard way to put your stops in and have targets that you aim for.
So the fib band is kind of like doing the charting for you.
Exactly. I don't even have to know what the numbers are, right? I don't even have
Yeah.
to know what anything, I don't have to do any of that, the projections. Y'all don't know what the projections are. There's like that projection tool, risk reward tool on TradingView. I've never used it. But there's a lot of people that do that, and sometimes you have time to use that. Sometimes you have time to like click the button, put it on there, and do all that jazz. But there's plenty of trades that I take that I don't. There's no way I could do that. No way I could put that in place. I would be upside down on the trade long before I would be able to put that on the chart. So this, you don't even have to know the numbers. Like, we're shooting for a 2-to-1 risk reward, right? And so, I can already just visually see that if my stop is here on this trade and my target is here, the middle band, at least the initial target, I at least have a 1-to-1 there. Basically, you can split hairs about the distance between these two, right? But you basically have a 1-to-1 there. And so all that needs to happen for you to have a great, and you can make money with a 1-to-1, right? All you need to do is have a win rate of greater than 50%. If you win more than half of your trades and you have a 1-to-1 ratio, you have a winning strategy. But if you get beyond that, like let's say this moves past the initial target and you get up here, well, I've got a 2-to-1 at that point. I don't even have to know the numbers. I don't have to do any math. I just know, this distance here. Let's just do it just to prove the point. So we got that distance there. It's basically a 1-to-1 to the initial target, and then we'll copy and paste, and so it's probably 1.75 to 1. To here. That's pretty dang good, without having to do any calculations, without having to do any math, nothing. You can visually see that that's a good risk reward, and then certainly it is if it just keeps going for you. If it goes up to this upper target, that's already 3-to-1 there, and basically 3.5 to 1. Risk reward ratio if it goes up to this target here.
How come there's no green arrow under these big green ones here? Yeah, like there, right here. Come back to the right. How come there's no arrow there? You have to go up. Like it didn't tell you to go up there.
Well, because the stochastic had already come up out of the oversold position prior to it getting inside of the bands. So we have to have, first of all, we have to have price inside of the bands, which is the blue background. And in order for us to get a green triangle, we have to have price coming out of the oversold position and inside of the bands. So it came out right here. Vertical line. Right here is where the stochastic came out. It might have been even the bar before. No, it was this bar here. that price came, or stochastic came out of the oversold position. But as you
Yeah.
can see, the bar is not inside the close of the bar is not inside the Bollinger Bands.
Oh,
So that's
okay.
the reason we didn't get a green triangle there.
But
And
you would obviously trade that, right? Just because you
yeah,
can see it.
yeah. I mean, this, I think I did take this trade. Is this yesterday? Yeah, I did take this trade right here. And I'll show you why when we layer on some more tools.
Yeah.
But you have this here. This is, let's just pull all these lines over to this example here. So if you had this sell signal here, your first target would be here. Where's the entry? Okay, entry would be here. In this case, your stop loss could either be the upper band or the upper band, which is that green band, or if you're not really comfortable having a big old stop like up here to this band, that's a pretty big stop. If you're not really comfortable with that, you could tighten it up to the previous swing high, but let's just call it that right there. Initial target is here. Is the middle band right there. So this would have been really fast. You would have gotten in, and then you would have hit initial target really fast. And there's no way you could have put any kind of projection tools or anything in place by the time you hit initial target. So you'd be half off there at that middle band, and then you'd be your next target would be the lower band. Next target would be the fib band. Next target would be the next. My bad. Next target would be the next fib band. I'm running out of lines here. Next target would be the fib band, and then your next target, you just work it on down to the fib bands. And if you have, let's just say you have 10 contracts on, you take half off. You'd take a half off at the initial target, stop to break even. One contract off here, one contract off here, one contract off here, and all the way till you ran out of contracts.
How did you play those, Donnie? Micro or mini?
I do micros.
Oh, you don't play the mini.
I don't play the mini. No, ma'am. I don't. Let's see. I've got some questions here. Let me see. Have you done the system on NQ versus QQQ? So you could see set a limit order at the blue band and know the price. I haven't done that. You can. You certainly can. I enter and exit my orders via market. I just place market orders.
Okay.
So if it hits I just don't split hairs about numbers. I'm trading the chart. So if I'm trading the chart, it hits it, then I just hit the button. And if it hits it, I hit the button. If it hits the target, I hit the button. But you can certainly do that, Martha. You can, if it doesn't work with your personality to do it like I do it, then you can certainly do it like that. But would the NQ chart give the same signals? Yeah, it should. I can switch over. Let's switch this to NQ. Maybe that. Let's see. Yeah, so there's the NQ. See, it gave the same signals. See, there's your short signal we just went through. Yeah. There's plenty of people that do that. And that would be an advantage to doing it, is if if you have Trade-Ovate hooked into your trading view, you could be like, you could be setting limit orders here on each of these targets. Or even if you have NinjaTrader, you could just be like cross-referencing the number here and putting your limit orders in your trading or in your NinjaTrader. Hope that makes sense. I'm going to switch back over to QQQ. Okay, so let's talk about, while we're here, let's talk about this trade because it'll bring us into another tool or another aspect of the Bollinger Bands. which is going to be your, whoops. Bear with me a second. Divergence. All right, so I brought in these labels here, which is going to show you like the divergences. So what it's trying to do is it's trying to take it. All that is a zigzag that's built into the background of the Bollinger Bands. Is everybody familiar with zigzag? You know, it like plots your pivots.
No.
Zigzag. There's a built-in one with a trading view. Well, somewhere in there is style. Where's my zigzag? Mine's on there, but the trading view one is not. Percent. Okay, let's put a different one on there. Just to show you, I mean, zigzag.
Donnie, it could be your color.
Oh, yeah, that could be it. Well, that's really ugly there.
You see it? It's right there. It's the
I can
color.
see it now. I'm going to hide those backgrounds. Scanning direction. Okay, so there we go. So that's the zigzag. And this is really messy. I'm going to hide the Bollinger Bands just for a second so you can just see the zigzag. So you see those pivots? That's what a zigzag indicator does. And I'm sure a lot of y'all already know this. Already know what
I don't know that
is.
indicator. Can you explain that?
Yeah, the zigzag. It's just all it is. It's taking the pivots. You know, your pivots are going to be your highs and lows of the swings, like the swing highs and lows. And it plots a label there, and it helps you see, you know, higher highs and higher lows. So, you know, in this case, let me actually let me speed this zigzag up some to where you can actually, like, it plots more. Let me try 5. Yeah, it plots more of the pivots. So, you know, you can see, you know, price made a lower low right here. So price came down and made a lower low compared to this higher low, and then so it made a lower low, and then it made a lower high, then it made a lower low, then it made a lower high, then it made a lower low. So I mean, you probably can't read that on my chart because it's blurry, but it's got labels there that say LH right here, LH as in lower high, and then LL here as in lower low, and then you got a HH here for higher high because it made it broke this high here and made a higher high, broke this high, made a higher high, and then it made a higher low here, higher high, and then it made a lower low, lower high, lower low, lower high, lower low. So it's just the market structure is what it's showing you. So, I mean, I'm not even going to put the Bollinger Bands on here yet. Because, you know, let me get rid of these drawings. So, is everybody familiar with the divergences?
Yeah, kind of.
Okay. Well, a divergence is going to be, somebody posted a really good chart of it. I'd probably have to scroll back quite a bit. It was a good, let me see if I can get that pulled up here. Not sure if I'll be able to do it without making y'all wait very long. Kind of committed now. Sorry, y'all. Here it is. Got it. All right, so here's that chart. Somebody, I think it was
Yeah.
somebody posted that in like a couple days ago. So, a bullish divergence is going to be price makes a lower low, and then indicator makes a higher low. And then a bearish divergence is going to be price making a higher high, and then indicator making a lower high. So, that's a regular divergence. And then you've got a hidden divergence where price makes a higher low, and then the indicator makes a lower low. So that would be a bullish signal. And the inverse is true for the bearish hidden divergence. Price makes a lower high, indicator makes a higher high. That's a bearish hidden divergence. And so this signal here, this one I took right here, was a divergence signal that I took. Hold on just a second.
Voice is gone.
Sorry, my daughter needed something. So I took this signal. This was one of the ones that I think Joan asked about. And I'll pull the Bollinger Bands up and you can see it, in its full glory. But this was a divergence. So price made a lower low, the indicator made a higher low. You see that?
Yeah.
And lower low on the price, divergence, higher low on the indicator. And so let me bring back in the Bollinger Bands and then hide the zigzag. Divergence. I'm sorry?
What's your YouTube name? Like, what do I have to use to get your YouTube?
It's just my should be my name, Donald Melendez. I'll post it in a second.
Okay.
Let me see. Oh, this was it. This was the trade that I took. One of the trades that I took. So you see that right here, price is making lower lows, right? But the indicator is it's making higher lows, and it's kind of hard to see. It's not as pronounced because first of all, the stochastic is has limitations, has thresholds. It can only go to 0 on the low end, and it can only go as high as the 100 on the high end. So it's kind of it's not really as pronounced, but that is a divergence right here, as you can see. That's a divergence there, and price is making lower lows. So that's what this label is that D that's there, that's trying to tell you that we're getting a divergence between price and indicator. So I didn't take it right here. All I did was wait for the blue background, and I got long. And that was a beautiful trade. So I had the
Which one of the indicator give you the D there? Is it the
It's
optimizing EMA?
No, it's built into the indicator. It's built into
Which
the
one?
Bollinger Bands.